India's flagship motor show, Auto Expo, returned after a gap of 3 years yesterday. While the likes of Maruti Suzuki, Tata Motors, Kia India and MG Motor India will lead the traditional automakers, M&M, Skoda, Mercedes-Benz and Audi have decided to give it a miss. But contrary to the buzz on the ground, stock markets were unenthusiastic about the grand showcases. The Nifty Auto Index hovered lower with 13 of the 15 index constituents closing the day in the red. Analysts believe the expo is unlikely to boost sentiment across counters as this year's edition lacks participation from major listed players. Besides, the focus is on electric vehicles, a segment where four-wheelers have a minuscule market share.
This Auto Expo is, it has brought a complete array of new refreshes and variants and new models, etc. More on the EV side. So, the OEMs are definitely expecting that the EVs is the next in thing for them. But, according to me, there is still some time left for the EVs to spread left and right and center, in the overall automobile industry. Definitely there is some, demand still for the ICEs, still with the picture on the EVs get cleared or clarified up to a good extent.
According to the Society of Manufacturers of Electric Vehicles, more than 8,16,000 units of EVs have been sold in India so far in the current financial year. Of these, 62% were two-wheelers and less than 4% were four-wheelers. Commercial vehicles commanded just 0.19% share. Add to it, Deepak Jasani of HDFC Securities said showcasing of new products doesn't necessarily equate to higher sales.
This is a showcase event. Basically, this shows the seriousness of the players for introducing new technology and new products. Now, whether these products will sell, to what extent, how will they be priced, that is yet to be known. But companies basically want to create some sort of impact by launching products at these show. So one should not sort of correlate these are the products and whether they will sell, whether there is a demand for this or not. So if they have showcased 10 products, maybe 2 of them or 3 of them will be launched and 1 or 2 out of them will be successful. So I think that is the way one should look at the products which have been showcased at the Auto Expo.
Analysts believe investors may adopt a buy-on-dips strategy for the pack as overall sales growth is expected to remain steady going forward.
The upside and all that is left because see, now FY23 was a very good year for most of the commercial vehicles as well as the passenger vehicles and all. But, because of the chip shortage, the passenger vehicle demand was there, but they couldn't supply or cater to whatever the demand was. So, the order book is still quite strong and the new launches are coming up. So, FY24, the visibility for the volumes is quite good on the PV side. So, FY24 will be a very good year on a lower base of FY23. The commercial vehicles and all, maybe there will be slight, slow down in their growth rate because now if you see in the YTD growth of Ashok Leyland and all, it's close to about 75 to 100%. So that growth will not continue in FY24. There will be some sort of slowdown, but definitely there will be a demand for commercial vehicles. Slowdown in the sense on the growth rate, but because of the high base.
Retail sales in calendar year 2022 rose 15% year-on-year at 21.12 million units as against 18.32 million units sold in CY21. As per data provided by the Federation of Automobile Dealers Associations, PV sales were up 16.35% year-on-year, while CV sales grew 13% on year. As sales outlook for the coming quarters looks strong and input cost pressures recede, analysts expect premium valuations of auto stocks to sustain. Patil of LKP Securities likes M&M and Ashok Leyland at current levels and suggests buying Maruti Suzuki shares on dips. As regards today, India and the US retail inflation data for the month of December will be keenly awaited by investors. Besides Cyient, HCL Technologies and Infosys are the prominent companies due to report their December quarter's results today.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.